Welcome to Market Call. I'm Morella Fernandez. Keith Richards joining us on the show today. He's President, Chief Portfolio Manager at ValueTrend Wealth Management. He'll take your questions on technical analysis. Here's how to reach us. Call us toll free. 1-855-326-6266. You can email us, marketcall@bnnbloomberg.ca. Thanks for coming in. Good to see you.
Good to be here.
End of the summer. Typically, September, we see that volatility. Are you making any changes to the portfolio ahead of that?
I mean, we've held cash for a couple months now, probably about 3 months actually, because we typically like to hold cash over the summer anyways. But I mean, we shuffled a few things around lately. We continue to believe that the certain tech stocks, the Mag 7s, are way overcooked, and so we've been trying to go into whatever's not in that category. So, value stocks, commodities, that kind of thing.
There has been some movement out of tech, right? It kind of feels like investors are having the same feeling of, hey, maybe we're in too much and it's overweight, and they're pulling back a little bit. So you see that as positive. Where have you seen some of that money going?
Actually, into a lot of the defensive sectors, and that is telling us something. In fact, I do videos. I did a video a few days ago, and I showed the relative performance. And if you saw the shift between like the tech sector was what it was all about since the April sell-off when Trump did his tariff announcements, and then as of the middle of August and on, the techs have taken a back seat. Now, they had a bit of a bid last week when the Fed came out. But so if you saw what the market was moving into, it's been like defensives, like the staples, utilities, where utilities were already moving, but industrials, like even healthcare, which has been like the dog of the universe for the past few months, even healthcare started to catch a bit of a bid. So any of those sectors almost you can start choosing from and just not be in tech. And I think that's not a bad idea.
Why is September typically more volatile than the rest of the year? Is there a reason for that?
It's like, why does it snow last Thursday or whatever?
Historically, there has to be some sort of reason that September turns out to be volatile. Is it just because we get used to the lull of the summer and then things pick back up?
Yeah, it could be. I mean, there are a lot of vacations and golf playing and all that sort of stuff. Summer volume, if you ever look at volume on stock exchanges, it's always low over the summer for that reason, right? So I would think that it's kind of the last hurrah, but this is just me thinking out loud, right? Okay. But all I do is pay attention to patterns, and half the time I don't even care why. But whatever the case, yes, as we get into October, November, you'll see the market start to find a bit of legs, and that's probably because the traders are suddenly off their vacations and it's back at it.
Got it. Okay, we're going to take a quick break. We will be back with Keith Richards. He's taking your questions today on technical analysis. Here is how to reach us today. Toll free, 1-855-326-6266. Market call at BNNBloomberg.ca if you are emailing your questions in. We're back in a moment. Welcome back. We want to start with an email coming from Skip. He said, could Keith comment on AEM, Agnico Eagle Mines? And we will pull that up in just 1 second. Have you invested in Agnico? I'm sure everybody has. That's what it feels like.
I have in the past. We've got, actually, funny enough, we just yesterday took a little bit of our gold out. We were early, I get to say, on gold. We were buying gold like literally a couple of years ago. But it looks a little extended right now. So we've been selling some of our gold. We didn't own, right now we do not own AEM. If you're a longer term player, I do think gold has still got lots of room to go. To me, it's temporarily overextended. You can see that on this chart. You can see it's, there's the breakout that, on almost all gold stocks and gold itself. And there's the move. And you can see it's kind of on a bit of a trend line, and it's arcing off of the trend line, which is one of the reasons why Craig and I sold. Again, I think we're like 14% gold, and we sold 2% yesterday, so we're not bailing, but we do think it's maybe a bit extended right now.
When it's arcing off, was that your indication?
Yeah, it's well, we use momentum indicators. They're overbought. And we do, yes, the percentage over the 200-day moving average. We have some ways of saying, okay, this is extended too much or too little, and we will buy or sell accordingly.
Got it. Okay, let's go to the phone lines. Brian is holding on the line. He's in Ottawa today. Hi, Brian.
Hello, Keith. If you take a look at the chart of Bank of Nova Scotia, I'd like to get your interpretation of it. I think 3 years ago, the high was $95. I'm not sure if that was the all-time high. Of course, it, like all the banks, has been beaten down and has been coming back. But it's the only one that has not broken above its prior high. Yesterday, as a result of earnings, it finally blew past the 52-week high of $80. And today it's been holding above yesterday's close. So I'm wondering what you think. How high will the momentum continue? What price do you think it can reach, and will it break above 95? Thanks.
Okay, so Bank of Nova Scotia, there's quite a few number of questions tucked in there. It's up 18% over the last 3 years. What do you see when you look at that chart?
And actually, to answer the question, I probably would like to see a 5-year, because the 3-year, he was talking about 3 years, it's above the 3-year point. But I mean, breakouts are good. Next. So, we like breakouts. When it moves quickly like that, you might expect a pullback. It's not a problem, though. In fact, Craig and I often, when we just bought a couple stocks yesterday, and one was an outright breakout, just like this. It wasn't a bank, but we bought a stock on a breakout. We waited for a little pullback, and we bought it because typically breakouts last for a while. So
can we pull up the 5-year for Bank of Nova Scotia? We'll see if we can get that done.
There we go. Okay, so it's not at a 5-year, like back to 22, right? It's so there's 4 years or something. So it could meet some resistance at that level at 95, as the caller suggested, but there's not a big wall. Like if you look back between late 22 and mid 24, there was a wall. Okay, let's call it $70 or something. It's hard to see on these screens, but one point in history is going to cause some resistance, but it's not as bad as multiple tests, as you can see here, that could cause a significant point of resistance.
Got it. Okay, so 85.96 is where we are today on Nova Scotia, Bank of Scotia. Let's go to John on the line from London, Ontario. Hi, John.
Thank you, Marilla. Hello, Keith. Keith, Dollarama reported today, and they're in the defensive sector, which you, I guess, prefer. Fundamentally, they beat on revenue, and the earnings were up 12%. It's pulled back almost $7 today. Is this a buying opportunity? It will be an ad for me. Thanks very much.
Okay, thank you for the question. It is down 3.5%. Dollarama. How do you read into this, first of all? And the chart, as we take a look at the 3 years, I mean, it's had a significant amount of growth just this year alone.
Mm-hmm. And we'll go back to that in a minute, the shorter term chart, because I can talk the color through. But I'm not a fundamental person. I have a CFA, Craig Aucoin, who works for me, and I ask him all the fundamental stuff, and I just look at the charts. But I was listening to your show just before the BNN, just before I came on, and one of the comments I think I heard was that Dollarama was suggesting in forward guidance they're uncertain. That's I think what I gathered from their comments. So that could be the reason it's pulled back. I mean, there's earnings is one thing, but the street looks for forward guidance because that's what's going to happen next, right? So. Having said that, now we can look at the shorter term chart, and it was, on the longer term chart we just quickly saw flashed up. It was a good picture. Longer term trend looks like it's maybe pulling back, and this is a consolidation. So typically, so long as that neckline, and I'm going to call it, whatever, a little bit over 180, if you want to call it 190 or 185 or something.
Sure, I know, it gets hard to tell.
It's hard to tell, but I mean, the viewer can probably look at a better chart and decide what that support level is. So long as it holds, you're fine to own it. Is it a buying opportunity? I always buy on a positive test of support. So I don't just say it's going to hold. I wait for a move up. Everybody wants to buy as cheap as possible, but the problem is that it could get cheaper by falling. So just be aware of that. I would not buy it until it proves that level of support.
So you wait for that small bounce and you jump in as soon as the bounce happens.
Right.
Got it. Okay. John, I hope that helps you out. We are going to take a quick break. We'll be back with Keith Richards, ValueTrend Wealth Management, taking your questions on technical analysis. Back in a moment. Welcome back, and thanks for joining us. Keith Richards with us. We're going back to your phone calls. Joseph on the line today from Montreal. Hi, Joseph.
Good day. Thanks for taking my call. Keith, I have a general question and a specific question. Generally, it's about Canadian Tire and what you think of it right now, but generally it's about how skewed indicators and what to make of certain skewed indicators during a massive price movement, and how to best determine a shakeout of froth versus a legitimate downtrend. And this might be a little bit hard to ask since we're already a few weeks past Canadian Tire's earnings, but if you want to just transport yourself back in time, Canadian Tire fell pretty hard for a couple of days there, such that all of the indicators said run for the hills. My screeners just said this is not one to buy. However, the only one that didn't really say anything too bad was the 200-day moving average. It stayed around there and then slowly rebounded. When you see such big movements in price that skew indicators to the downside, is there any way, or what would you do to differentiate like is it the shakeout of the froth, so that it's probably just getting rid of some excess greed in the market in that particular stock, versus one that says, you know what, this is probably one to avoid?
Okay, Joseph, thank you for the question. Good question. If people are selling and you see that steep drop, I guess the question is it a one-time hit to the stock and will it recover?
So actually,
do you look at volume? So is that something you would look at to determine?
So he's talking about indicators, probably like momentum studies and stuff like that. So Joseph, because this could be a half-hour discussion and then the show's over.
Sure.
So I will steer you towards a couple of videos. In fact, I just recorded video yesterday, will be on my YouTube channel tonight, on how to prevent, falling victim to topping stocks. And I did one a couple days ago on bottoming stocks. And it talks about those indicators. So one of the things, when it comes to indicators, there's longer term, and boy, this is a long discussion, but there's a longer term way of looking at it. Take a look at my video tonight. It'll be posted at 4 o'clock. But there's a longer way of looking at it, and just simple overbought, oversold. So I'm going to just suggest that if we just talk about the chart today, and then you can go to those two videos and learn more about the indicators, especially today's at 4 o'clock. What I'm seeing here, and if you were to go back over Canadian Tire's history, it's been kind of an up and down stock. It looks like there was some old kind of resistance. In fact, if I clean this, you can see there was maybe a bit more resistance on the stock back about a year ago. And it looks like it's attempting to bounce off of that. And so what's the next thing you're going to look for when we talk about those indicators? They're going to be hopefully hooking up. But now you're going to have to look for the next level of overhead resistance, which is maybe up here. I'm looking at a very short-term chart. But I would say that this is a decent probability for a near-term trade. Very probable on that. How high and how long that lasts is to be seen. Just quickly, can we look at a 3 or 5 year chart or something?
Pull that up.
Because, there we go. Canadian Tire, well, here we go. This is like a 3 years. So Canadian Tire, as I recall, I do remember that Canadian Tire has a bit of a bouncy look to it. And so there's your bouncy look. So I love swing trading, and this is a swing trader. So, if one were to look at this 3 year picture, it would imply that you're probably on your way down to either the middle or the lower part of that band. So just be aware of that. The short-term picture looks like maybe it'll pop a bit, but the longer-term picture may suggest a bigger swing.
Okay, so as you said, Canadian Tire pretty bouncy. Last high was July was 192.74, and the low was at the start of the year at 140. So pretty bouncy. Okay, let's go to caller Chris on the line from Victoria, BC. Hi, Chris.
Hi, Morella. Hi, Keith. Thank you for taking my call. Keith, I'm really looking forward to your insights on Lululemon. I am not a technical trader at all, but this is my exception, and I am new to the stock. I'm at an average price of about $203 US, and I've pretty well just bought myself a full 5% position over the last 2 weeks. And I know you like to go in increments, and I do with all my other stocks, but I'm curious to have your thoughts on Lululemon for, say, at least an 18-month hold, potentially longer. Thank you so much.
Okay, Lululemon at 206.78. I just want to look at the low, which was this month in August at 186.44. So he's already made some money if he came in at 203, he said. But again, pretty bouncy chart.
Yeah, and let's leave this 5-year
Sure.
chart up. Actually, maybe I could get it on. Oh, here it is. Okay, it's right there. So, in fact, we should probably be working from 5, 3, and then short term rather than the other way around, because this gives us the big picture. And you can see that Lululemon had support. Again, I'm going to call this $300 because these charts don't really show the prices very well. But something in that range, and probably didn't draw my line very straight either. There we go. That was a pretty good line. I got the tests, and you can see it does bounce, and then it bounced and then failed. So this is called a failure of support. Okay. So what we have right now is a breakdown, and this is the opposite of a breakout that we were looking at with the stock earlier. So things will get oversold just like they will get overbought. It will probably bounce in the near term. If you looked at some of these shorter term indicators like stochastics and RSI and all that, you'd say, oh, look, that's going to be an opportunity in the near term. And you probably do have an opportunity like this color is taking advantage of. But there's going to be this monstrous wall here. Let's call it 270 or something. I don't know what that number is, sorry, but whatever it is, you're going to see that monstrous wall. It'll probably fail before that point, if not at it. Okay, and that's because there was a lot of people. Think of what support resistance is. People bought there. They remember what they paid, and maybe they made money. And then they watch it fall, and then then other people bought here. Some people bought there. Some people bought there. They remember what they paid. They just took a shellacking. They want out, and that's the reason why you'll see selling pressure.
Got it. Okay, let's go to our next caller. Then Kevin is in Belleville, Ontario. Hi, Kevin.
Hi. Thank you for taking my call, Keith. I enjoy reading your blog, ValueTrend. It's excellent, and it's inspired me to join. My question is on Visa. Visa has not kept up with the S&P 500 over the last 3 to 6 months, and traditionally it's always outperformed the S&P 500 since it went public back in 2008. So I'm a bit concerned why Visa has not kept up, and I'm interested in your technical analysis if it's just consolidating, or is it going to be going down, or do you think the trend will resume upwards?
Okay, thank you for the question. We'll pull it up. I was looking at the 6 month as he was referring to, but we've got the 5-year up here.
Yeah.
And tell me what you see in the 5-year.
Okay, and I can also do a little fundamental commentary here. I'm not a fundamental person, but I understand this much about the credit card industry and the credit industry in general. And that is that there is a lot of talk, probably based on, I mean, look at what the Fed did last Friday, right? There's going to be probably some reason for the Fed to ease because the economy is probably slowing down, and who suffers the most is people purchase things when it's a good economy, people don't purchase when it's a poor economy, so Visa and the like will maybe suffer a bit, right? So that is probably the reason why Visa has stopped moving up at the same degree as the S&P 500. So let's just now look at the chart, and you can see that it is doing what I call, every technical person out there calls it a consolidation pattern, okay? So we can take a look at maybe a 1-year or 2-year chart or something here, and I can zoom in on that, but basically, it's
what is the consolidation pattern?
Okay, well, stocks get exhausted after, just think of yourself as an athlete and you're on a long marathon. At the end, you kind of need to cool down for a while before you can do another run, right? So that is exactly what stocks do. They have a run and they consolidate for a while by moving within usually some sort of a rectangular pattern. There's different patterns. It doesn't matter for this discussion. But so long as the pattern doesn't break, you're okay. This is a swing pattern. Again, I don't mind these things because you can trade them, and if they break out, then you want to be a longer-term owner, right? At this point, though, the problem with consolidation patterns is that they could break out to the downside. And if Visa is slowing down because of that fundamental reason that maybe there'll be a softer economy in the coming year or so, then you probably got to be cautious on this stock. So that would be my comment is for now, it's just consolidating. We don't assume anything, but it could be a warning sign.
Got it. Okay, we are going to take a quick break. When we come back, we will have a look at Keith's past picks. Back in a moment. Welcome back. We are going to walk through some past picks from Keith Richards from June 24th of this year, so a couple months ago. At the time, he chose ARC Resources on the TSX, a natural gas player here at $29.69. They've actually moved down to $26.52, 11% drop, total return of 10% drop. Natural gas player, the price for natural gas it's expected to move up, but that's going to take time. Is this something you are still in? Is this a stock you still like?
We own it, and actually we bought a little bit more. The pattern on it is it's not broken our key support levels. It's just kind of sucks that it fell. Mm-hmm. But we have and in fact, somebody was mentioning my blog. I've been running this blog since 2008, by the way, so I've got lots of readers. And on the blog, I talked about why we're still in natural gas. People that are...
What is the reason?
Well, bottom line is that, there's a huge, we look at the factors of drawing energy right now, needing power, okay? AI is the big ones, right? Even, was it Google the other day that announced they're doing their own power station? And they're going to use natural gas. Kevin O'Leary in Alberta is doing an AI center here in Canada because of the natural gas, okay? So that's worldwide, this is huge. Second thing is cloud computing. Third thing is population growth. Fourth thing is just general power need. So there's a lot of reason that natural gas has a future, although in the near term, there's the swings of the traders and stuff that's going on. So we do like, and so long as it doesn't break down technically, we're okay with it. In fact, we did add to it recently. So check the blog out for more reasons on that. And ARC is part of that story.
Got it. Okay, let's get to your next past pick, Global X Silver Miners ETF. 47.20 US at the time, up to 54.72, 16% upside, 16% total return move up. Silver price has moved up, which you have said before, that will follow after gold shot up early in the year. Why are you doing it through an ETF in this situation? Okay.
Well, a couple of things. We should also mention that my picks are always 1 or 2 months apart between shows. So These were June. So again, we can forgive some of the moves. But so I mentioned when I was talking about this stock as a pick a couple months ago that I really like gold, to sound like Austin Powers. I love gold, Mr. Powers. But we like silver more because there's a catch-up trade, and I talked about that on the show. That Craig and I felt that there's a catch-up trade on silver. So the miners this is probably the best way to play them. And it's widely traded, so it's liquid and all that. And so we're just sort of playing that catch up right now. They have had a good move. We sold a little bit of gold recently. We're still in this trade for now.
Got it. Okay, let's get to your third pick then from June at the end of that month, which was cash, which you said you were still keeping aside and you like to do in the summer months. Just explain why.
Well, if you look at long-term statistics, the summers are often slower, particularly, by the way, August, September, October, okay? Now, it's not that people get seasonality wrong. It's just a tendency. It's sort of like if you drive on the 401 in Toronto at 4 o'clock, the tendency is there's going to be a big pile of traffic. Mm-hmm. At 4 a.m., the tendency is there's going to be way less traffic, okay? But it doesn't mean that there won't be an accident that will cause traffic and stuff at 4 a.m. and vice versa, right? So that's VIX and whatnot, like if you look at volatility over those months, like the VIX, for example, tends to, on average, be a little bit higher. It hasn't been in August, but it doesn't mean it won't be in the next couple of months. So there's a lot of reasons why we like being a little more defensive. So we buy more defensive stocks, we hold a little bit of cash, go towards value, plus the fact that we don't like the Mag 7 so much right now at these valuations.
Got it. Okay, we're going to take another quick break. Keith is sticking around to take your questions for technical analysis. We're back in a moment. Welcome back, and thanks for joining us. We are going to Elliot on the line in Hamilton, Ontario. Hi, Elliot.
Good afternoon. Moving from the mid-40s up to 57, TMX Group seems to be stuck there now. Is 57 a pretty solid ceiling? What are the technicals telling us? Thank you.
Thanks for the question. 54.62, a little bit down today, but up 100% almost over that 5-year period. What do you see looking at the TMX Group?
Yeah, I mean, this is, and for people that want to memorize a little slogan, here's one to remember if you're looking for great stock candidates. It's called, the longer the base, the better the case. I often repeat that on my blog. There was a big base for several years on TMX. It was, I remember those years, it was trapped, and then it broke out, and look what happened. And you can find this over and over and over again if you see these big, long breakouts. So that it's moved into an uptrend. Boy, I gotta adjust my line drawing abilities. It probably is just returning. You can see it arced off of the trend line aggressively. So you would have seen all these momentum indicators that I follow going, oh yeah, they're overbought. So it's pulling back. It'll likely retrace somewhere near that trend line, which will probably line up somewhere near the 200-day moving average. It probably won't hit it exactly. Nothing ever works perfectly. But it's just doing a correction within an uptrend. The only thing I would watch is that there is a little bit of support. Maybe actually I could get a 1-year chart.
Sure.
And then when I see the 1-year chart, I can draw it a bit better with my shaky hands.
Okay, there we go, 1-year chart.
Okay.
So what are we so it's above 54. Where's that point across your chart there?
Yeah, it's a little bit fine here, but it's probably somewhere around here. There was a cluster here that we could call support on an angle, and that's broken. But I'm going to suggest that probably around here, you know, there's going to be those old buyers will remember, and they may start selling if it breaks that. So what I would suggest is it's probably okay. You just got to keep an eye that it doesn't break this level, which is whatever this is, 51, 52 bucks. And otherwise, though, that longer term uptrend is just being corrected from being overbought. So it's not a disaster at all, as far as I'm concerned.
Got it. Okay, let's go to Linda on the line from Edmonton today. Linda, what's your question?
Oh, good afternoon. My question is on Propel Holdings, PRL, which is a Canadian fintech company. The fundamentals seem to be pretty decent, but I would really appreciate your technical analysis.
Okay, thank you for the question. Let's go to Propel Holdings. We've got it on a 5-year here. That big dip at the start of the year, I guess. And where's your support level for Propel?
Yeah, so this, the only thing we have to be careful with this is this could be what technical analysts love to give names to everything, you know, head and shoulders and this and that. I don't get into the names game as much. I just look at support resistance stuff, but this could be a double top. I mean, just be aware, it's not a double top until that last low, which is whatever this is, 20-ish, $25 or something, is broken. It is not at that point, or it's not even really that close to it.
And what does a double top indicate?
Well, a double top is it failed at its old high, right? So then it fell rapidly, telling us that at this point, sellers came in a big way and pushed it down. Then buyers came in a big way and pushed it up, but it stopped right there. It didn't break through. So the news wasn't that great that it would drive it through that old level. Remember, people bought as many as people sold there, okay? It's always equal. There's no more buyers than sellers. It's an equal number of people. So some of these people maybe took advantage and sold, and that's why it's selling off. We just don't want to see it break that neckline, because then you're looking at a whole world of pain back in the old consolidation zone. All right. At this point, I would say I'm going to give this a 5 out of 10. It's moving like that. It might return to 25 or whatever that dollar figure is and bounce off of it, which is fine. But if it breaks, beware.
Got it. Let's go to Grant from Calgary in Alberta. Hi, Grant.
Oh, good morning. Thanks for taking my call. Keith, could you please comment on Galaxy Digital Holdings? I'm interested where this thing might bottom out and a good entry point, and I really appreciate the show. Thank you.
Thank you for the question. Galaxy Digital, we will pull up. There we go. So that's on the 5-year. Wow, it's up 600% in 5 years at 34.25. Their data center is essentially digital asset. Do you know much about them?
Well, again, I have looked at the
yes.
chart of this before. Don't even ask me what they do, but Digital Holdings, it tells you. But so, it talks about, 550 or 600% up, but, this is such a jittery stock that, you certainly aren't up 600% if you bought, a year after that,
yeah.
right? So, in fact, it more or less has kind of been toying with that old high from 2021. And there's been an awful lot of stress or excitement in between. Some people were excited and some people not so much when this happened. So I'm going to suggest that this is pulling back now. It's pulling back into that zone from 21, 22. And you really don't want to see that fail, because it could end up looking like one of these where, you got a high and then it failed and it rose and and it turned to this, right? So just beware that it's failing at an old resistance point. So it's not failing. It's testing, I should say, an old resistance point. You want to see that it finds some legs, maybe pretty soon, and then you should be fine. But if it doesn't, I'd run, because this thing is not for the timid, this stock.
All right, we're going to take a quick break. More phone calls for Keith Richards of ValueTrend Wealth Management for technical analysis when we come back. Welcome back. Thanks for joining us on Market Call. Let's go to Jonathan, who's holding on the line in Toronto. Hi, Jonathan. Jonathan, are you there? Okay, we may have lost him, or he's left us on hold. I'm going to move on to Paul, calling us from Orangeville, Ontario. Hi, Paul.
Hello.
Hi, what's your question? Hello?
Energy fuel.
Energy fuels. Okay, what about it?
Okay, I called, I spoke with him a month or so ago, last time he was on, and I had sold it $12, and he advised it to wait until 11. Okay, it went down to 11.34 and 11.31. Now, yesterday has jumped up $3, and I put my next low at 13.25. What does he think about that?
Okay, thank you for the question. Energy fuels, this is the 5-year. Do you want to read off the 5-year? Do you want to do something?
No, well, we'll start with this,
sure.
Because it gives the rest of the viewers the setup. And the setup is, remember I mentioned this the last segment, we said the greater the base, the better the case. Everybody remember that. If you leave the show, just remember that you're going to be well served. So big long base. I mean, that's beautiful. And then it broke out, okay? Parabolic break for sure. Like that's a pretty monster move. But that's what happens, these long bases, when they break out. So now let's take a look at the maybe 1-year chart, and we can sort of take a look at the shorter term moves.
Sure.
So this is, okay, so here we go. So you saw the bigger case is it's moving up out of a base, and here we go. There's a parabolic move, and then we talked earlier about, I can't remember which stock it was, but you asked about the consolidation and
yes.
Why is it good? It's good because it's the pause that refreshes. Something moves parabolically like this, it can't keep going. It needs to take a rest. So it takes the rest, and that's like the athlete, takes the rest, and then boom, next move. So you're probably going to find that maybe this move has a bit more. It very well could, or maybe not, but it will quite probably move into some sort of consolidation. Maybe it's already started. And then so long as the fundamentals are good and whatnot, it'll do another breakout. If you see that consolidation, so let's say let's say we are here back from July, and it had broken down, then you have a reason to sell. But so long as it just consolidates, breaks out to the upside, you're good.
Got it. Okay. We hope that helps him out. Let's go to Jonathan, who's back on the line from Toronto. Hi, Jonathan.
Thanks for taking my call. I have a question on Enbridge versus BMO, but there's a two-part question. So one is just a general question. These stocks are interlisted. Do you look at the U.S. chart or the Canadian chart? And the second part is, BMO just broke out past the 3-year resistance line. Enbridge had a 10-year resistance line. Your thoughts?
Okay. So do you look at one or the other, multiple listings? Do you gravitate towards the...
No, okay. So it's a Canadian stock.
Yeah.
And so the problem with looking at it on the U.S. exchange is now you're looking at the currency
exchange as well,
right?
yes.
So there's no point because it's going to distort things. Like, look what happened with the U.S. dollar this year, right?
Yes.
It just got smashed. And so that would have made the U.S. side, I should say, converted better, right? So I've got to think there for a second. Yeah. So it would have made it look artificially too high, all right? So I just, like, if it's a Canadian company, I'm going to look Canada. If it's a U.S. company, I'm going to look in the U.S., all right? So, yeah, BMO, broke out, and so far so good. I mean, I can't say this is a longer-term chart, but the trend is up. So let's take a look at BMO on a shorter-term basis, and maybe we can kind of pick some spots. Yeah.
Okay, so let's Bank of Montreal. You want on a sort of 3-year, 1 year?
Yeah, and I can see the blue line.
Okay,
it's
let's
hard
pull
to see
that
with
up.
the lights.
There we go.
Okay.
Nope, that's energy fuel. So we got to get BMO back up on a 3-year or a 1 year. We'll work on getting that. I'll pull it up.
There we go.
Here.
We have it.
On a 1 year. So BMO at 164.
Yeah. So breakout, higher highs, higher lows, all good. I mean, sure, you get the little pullbacks here and there, but there's nothing wrong with this chart. So we were going to compare it to Enbridge. So let's pull up an individual chart of Enbridge because the line I was looking at before was kind of dark on my screen, so I couldn't really see it.
Okay, so Enbridge on a 5-year here.
All right, so there's Enbridge, and so actually it did another little one of these fancy names, CUP. Okay, so sometimes they do. Try not to get excited, everybody, but sometimes we call them rounded bottoms, and they break out. And sometimes do a little handle, like cup and saucer, a cup and handle they sometimes call them, and then they move up. So this is what's been happening is it broke out. Now it did a consolidation, and then it's breaking out again. So let's take a close-up look at Enbridge. It's like a cage match, right? It's like watching wrestling.
Okay, so pull up the Enbridge 1 year and have a look at that. There we go.
Okay, so here we go. So you see that close-up. There was your consolidation. And nice swing trade, by the way. And then, boom, broke out. And so far, you can see it's tested, okay, the breakout point. You see how that did that?
Yep.
But it successfully tested. It broke off. So I talked about that before, that you need successful test of anything, and then you're confirmed. So Enbridge looks good, too. You can't put a gun to my head and ask. They both look good for their own reasons. I'm sorry, I'm calling it a draw. The referee says you both win.
Okay, hope that helps him. Although we didn't choose one or the other, they're both good. Let's go to Tony from Prince George, BC. Hi, Tony.
Hi, thanks for taking my call. Keith, I bought Robinhood back in April off the dip, and I just don't understand this stock at all. Fundamentally, it makes no sense to me. I mean, I wouldn't even buy this with your money, but I bought it as momentum play, and I don't understand why it keeps going up. It's up almost 400% in the last year. I'm trimming my profits, so I'm playing with house money now. So what do you think? What does the chart tell you?
Yeah, as I mentioned, I do blogs and videos, and one of I think it was a video watcher said, you got to read this book. And I do. I take viewers and readers and commenters' suggestions all the time if it sounds right. So there was a really good book on momentum that one person recommended. And, the bottom line is that you don't fight it. You just kind of go with it, baby. So it's so that would be the case with Robinhood. You don't have to understand it. You just now I don't do a lot of momentum trading, but who's to argue, right? So let's take a closer look. I mean, that's parabolic, so we know that. I mean, this is what the caller's talking about, is that it's gone crazy. So if I could see a 1-year chart, maybe we can. So
go.
Okay, so there's your move. And you see how, I don't have momentum indicators on this screen, like things like MACD, RSI, but you can get a heads up. Again, watch my video at 4 o'clock today. I talk about all this stuff, like how to spot a potential top, and even the signs that beforehand. People will find that of interest. But you can sort of see there's a little bit of rounding here. So just be aware. It could be just consolidating, like we've talked about a couple times, but you don't want to see that break. And if you start to see some of these momentum indicators rolling over before the stock breaks down, that's a warning sign.
Got it. All right, we do have to leave the questions there. Keith has new top picks that he'll share after the break. Stay tuned. Join us tomorrow on Market Call. Mike Vinokur will be on the show, portfolio manager at MV Wealth Partners with IA Private Wealth. He'll take your questions on North American large cap stocks. And if you missed Market Call, check out our daily podcast. Find it on iHeartRadio and other platforms. You can also watch full episodes on our YouTube channel. Time now for new top picks from Keith Richards, and we are starting with Northwest Healthcare REIT on the TSX. It is NWH-U. We talked about healthcare in general being beaten up the first part of the year. This is a REIT in that space. What do you like about it?
Well, remember I was talking about the volatility stats, August, September, October. We wanted to own lower beta, boring stuff that wouldn't probably move a lot. But in this case, you're in a decent dividend. I'm sorry, you could probably look up what the dividend is. But it's sideways. And I don't expect a ton of activity on this stock, except that it is in two sectors effectively all in one that are overlooked, healthcare, but it's real. It's a REIT, so it's a real estate trust for healthcare operations. It's a pretty steady eddy. I mean, that business it doesn't see a lot of fluctuations. So you just earn the dividend. It'll probably hold its own between now and the fall, which is when we'll probably exit it. If we make a couple of % on it and earn some dividend, we're happy because it'll do better than cash.
Got it. Okay, let's go to your next pick then, which is Tourmaline Oil on the TSX TOU. This is another natural gas play. We had talked about ARC, which you recommended 2 months ago. Are you getting into Tourmaline? Do you already hold it? What do you like about it? Are you doubling up here on that sector?
Yeah. So you might remember when I was talking about ARC, I said we added to our.
Yes.
This is one of the things that we added to.
Okay.
So we think that the gas in general, the price of nat gas fell. The producers fell. They've been spanked pretty good, so we're trying to buy. And if you look at that pattern, I mean, it's been as sideways as could be. So the old expression, buy low, sell high, and it really, exactly where your stop loss is. Like, you don't want to see it break this old support level. It shows no sign. In fact, if we go back to that 1 year chart, you'll see it. But the support level is like magic. It seems to. So I thought, well, we were buying it. I'm going to come on the show and talk about, buying it because I think there's a great future for natural gas, even if, so you can, we pick it up whenever it, it looks good. So
I look at that chart and that looks like a pretty volatile
It is.
chart.
Totally. Yeah, it is volatile. So you don't buy here.
Yeah.
You try to buy when it's near the bottom.
And the bottom here would be what for you?
Well, somewhere in the
57?
Yeah,
56?
56, 57 area. Yeah,
Got it.
Yeah.
Okay, so that is Tourmaline Oil, TOU on the TSX. I want to get to your last pick, which is Weatherford, which is on the NASDAQ, WFRD. And this is an oil services player. What do you know about them? What caught your interest here?
Okay, so I get to pass it off to Craig because Craig is our CFA and he does all the fundamentals. What I do is I come to Craig with technical ideas, and then he rips through them and decides which ones he likes fundamentally, and then we decide if we're going to buy it together. So in this case, it's a services company. It's been very depressed. This is, I guess, a 2 or 3 year chart, and you can see it was in a downtrend. Lower highs, lower lows, all that stuff. And lo and behold, look what happened. It broke out, and it's now starting to move up again in a very early stage uptrend. So the way we're looking at it is that we know our out point if it starts to fail. on the trend line, we'll get out. Maybe if it drops to $50 or something, we would sell it, right? Because that means it's no longer doing what we want, higher highs and higher lows. But there's lots of stopping points. It's probably at one right now that could be targets for us, and so we think it's a good buying a depressed sector at the right time.
Is this a new acquisition for you?
Just yesterday.
Literally just
Literally
yesterday.
bought it yesterday.
And so you said you're going to watch to see if it goes down a little bit, and then you will sell out if it hits a certain point?
If it fails, but if it continues to move up, we leg in. So we bought one leg. We do 3 legs whenever we buy something. So we'll buy another leg. Like we only have like 1.5% position now, and maybe 2 or 3 weeks we'll buy another 1.5, and we'll just keep going if it keeps moving up, because there's lots of upside if it keeps moving.
And then when it moves to the upside, what kind of percentage move are you looking at to put your next leg in?
Yeah. So, okay. On where will I buy
Put your second,
a leg in?
Yes.
I'm going to look at these are your resistance points. So these are the targets, right? It kind of blew through that. This is the next one, okay, which is around 75.
Got it.
And so hits that and then successfully breaks it, we'll buy some more. And then we want to see old consolidations broken out because it proves that there's still buyers. So we just a little bit at a time go in, and if you go wrong in early stages by legging in, you can sell without taking too much of a hurting to your portfolio. So that's why we do that.
Got it. Okay, we do have to leave it there. Keith, thanks for coming in. Good to see you.
Good to be here.
All right, and we will thank you for watching us on Market Call. We'll see you again tomorrow. A quick look at the markets as we head to a break.